tourist destination with white sandy beaches and tropical landscapes. A booming economy with decades of industrial growth and political stability. Join us this weekend as CCTV speaks to Malaysia's Central Bank Governor, Zeti Akhtar Aziz, as she shares her views on the country's efforts to avert the adverse impact of the global economic recession. Only on BizTalk.
Welcome to Kuala Lumpur, Malaysia's bustling and colorful capital, a melting pot of Malay, Chinese and Indian cultures. Despite the global financial crisis, Malaysia is emerging as an investor darling in Southeast Asia, posting one of the fastest growth rates in the region. While the country is known around the world as a popular honeymoon destination, it has also grown into a hub for Islamic finance. I will talk to Malaysia's Central Bank Governor Zeti Akhtar Aziz about the economic outlook, relations with China, ASEAN cooperation, as well as its booming Islamic finance industry.
Kuala Lumpur, a bustling metropolis of 2 million people, a melting pot of different cultures and races, home to two of the world's tallest towers. The Malaysian capital is a picture of wealth and progress, a fitting symbol of the country's economic status. In recent years, Malaysia has seen a resurgence in both public and private investments, in the manufacturing sector as well as in the property sector, generating jobs and boosting domestic consumption. All this has helped driven economic growth to a relatively strong 5.6% in 2012. Insulating the country from the volatility of the global economy.
We actually diversified our export destination quite a bit. So much so that our exposure to, let's say, Europe and North America has somewhat declined. We did not advance ourselves industrially, meaning that we were just producing this low labor, skill intensive kind of activities, assembly kind of activities.
But Idris Jala, a minister in the Malaysian Prime Minister's office, says that is rapidly changing.
If we continue this pace with the investments that's coming in, with what is happening in the last 2 years or so, or 3 years, I think we should get even to the high income threshold before even 2020.
But for now, it seems both local and foreign investors are in a holding pattern. This year's national election is widely considered to be the most closely contested. If the opposition wins, the change in leadership would be a first for Malaysians in more than half a century.
Governor Zeti, thank you very much for your time. You have been governor of the Bank Negara Malaysia, the central bank of the country, since May 2000. What is your view on the current state of Malaysia's economy?
Well, of course, we are very affected by the global developments, both through trade and also through financial flows. And however, we are able, after 10 years of restructuring our economy and reform and development of our financial sector, we have been able to manage these circumstances, and Malaysia has been able to experience steady growth, and there has been no disruption in our financial markets or credit flows, and this has been able to support the economy.
While many emerging and also developed countries, of course, have suffered from the global financial crisis, Malaysia seems to be emerging a little bit like a darling in Southeast Asia, right? What is the success recipe behind this very unusual case?
Well, it's not what we did now, but what we have done for many years, and restructuring our economy to not just depend on the export sector. Malaysia in the 1990s was very much export-led, but now domestic demand is actually driving our economy. We have a more balanced economy, consumption demand, but more importantly it's the investment demand or investment activity that has been driving our growth. And then all the reforms that we undertook and to develop our financial sector. That was very important because it was over-reliant on the banking sector at the time of the Asian financial crisis, but now we have a well-developed bond market, which is also conventional in the sukuk market, and we have strengthened our financial intermediaries through rationalization, consolidation, and restructuring. So the financial intermediaries have emerged very strong in this environment, and they have been able to be more resilient. The other factor that has also been important is actually we have liberalized our financial system. So there are two-way flows. So these two-way flows are by the private sector, and in that they can invest abroad, and they can have foreign currency accounts and conduct a wide range of foreign exchange exposures. And therefore, they provide a source of stability, because when the currency weakens, they take the opportunity to purchase the currency, and when the currency becomes more expensive as it appreciates, they do otherwise. So in fact, we have almost a freely floating exchange rate regime in operation.
Malaysia's economy is among the fastest growing in Asia after China and Indonesia, the Philippines, and latest data shows that the economy expanded by 5.6% on an annual basis in 2012. That is after 5.1% I think in 2011. Now, what is your forecast for 2013, and where do you think do the main risks and challenges come from?
Well, we envisage that the Malaysian economy will remain on this growth trajectory, which is a steady growth, and this is what we have aspired to achieve. And the importance of domestic demand is vital to this, and so the economy now is more balanced, and we have also taken many initiatives to diversify our economy into other areas. So even in manufacturing, which is a traditional sector, it has been diversified to higher value-added activities. And then the services sector has grown very significantly. And of course, the construction sector has recovered. So with the recovery of domestic demand, investment has picked up. And also, there were many initiatives to improve the investment climate. So now we're seeing the payoff from all these initiatives that have been taken.
At the first policy meeting of the year, the Central Bank of Malaysia kept interest rates at 3%. Now, you have been holding interest rates for almost 2 years, since 2011. Under which circumstances would you consider a rate cut?
When our economy started to recover, the first signs when the recovery looked like it was entrenched, in 2010, we started raising rates from the 2% where it was, and 4 steps to where it is now. And of course, there are still risks to growth, and so we have kept it at these levels. Of course, we have the flexibility to adjust the degree of accommodation, but given that our domestic demand is strong now and rigorous and robust, the current rate is deemed as the appropriate rate.
The central bank estimates that inflation in 2013 will pick up very slightly, but still remain under 3%. What is your outlook for inflation this year, and where do the main price pressures come from?
Well, of course, we have strong domestic demand, and then there's potential for commodity and energy prices to rise, and these will be the sources of reasons why prices would rise. And then, of course, the government has also stated that there will be rationalization of subsidies, although this will be done gradually, and other price adjustments may be made. So all this will will result in some increase in prices, but we expect it to be very modest, and therefore the inflation is likely to be well below 3% during the course of the year.
At Malaysia's international airport complex, a sea of red and white. AirAsia's aircrafts have been dominating the airspace in recent years. It's become a force to reckon with in the budget airline industry. In fact, the Malaysian company, the region's largest low-cost carrier, has been expanding its business despite a weak global economy.
One of the things about low-cost travel is that we're a little bit recession-proof. People trade down from premium to low cost.
Although AirAsia did have to stop long-haul flights to Europe due to the crisis, it has just announced plans to set up a subsidiary in India. It's already taken advantage of the booming market in Southeast Asia, where economic growth has outpaced the rest of the world. In Thailand, the Philippines, Indonesia, and in Malaysia, where it will soon be moving into a new terminal. The $1 billion 26-hectare terminal will be able to accommodate some 45 million passengers a year. Last year, AirAsia brought an estimated 20 million passengers to Malaysia, 5 million more than the capacity of its current terminal. It is just one out of a growing number of Southeast Asian companies that are diverting their businesses into the region, even as the ASEAN community prepares to move into a more integrated regional economy.
What the government does is simply, translating what the aspirations of the private sector, the movements of the private sector. So private sector, the governments recognize the market forces and they actually work with the market forces.
And that may mean more investments from outside and within the region, as all signs point to an ASEAN economy that will continue to be an engine of global economic growth.
The Association of Southeast Asian Nations is a cornerstone of Malaysia's foreign policy. Where do you see most cooperation potential and possible hurdles that need to be overcome?
We have drawn many lessons from the European experience, and this has also during the good times we want to put in place, and we are putting in place, for example, an integrated crisis management framework and the governance process during this period, so that we will know what to do and to do it very preemptively rather than reacting to developments. So we undertake surveillance, and we discuss what the risks and vulnerabilities to the region, what the options, policy options and measures that we have, and we exchange experiences with these policies, and we are in touch with each other all the time so that we respond promptly to developments. And this is with respect to, of course, managing risks to the region.
The crisis management framework, how far is the establishment already, and when do you expect to have some kind of an agreement?
We are putting in place what are the measures and procedures that will take place to manage this, and who has the expertise and the pool of expertise in the region, so that we can pool these expertise together so that we will be prompt in dealing with it. But the one guiding principle is to act very preemptively, because obviously the cost of the crises will be significantly less rather than to be reacting to developments after they have happened.
At the heart of the industrial zone in Malaysia's northern island of Penang, Abdul Salam runs a small factory that makes food products out of coconut, which is organic and therefore halal, or permissible under Islamic law. Or is it? Abdul says it's not that simple.
The Malaysian governments are very strict on this. From the coconut milk, from the gluten rice flour, sugar, brown sugar, whatever you add in to make the dodo, you have to make sure it's halal.
Not only that, a majority of Abdul's staff has to be Muslim. In this case, he and his wife and a few family members. The premises have to be squeaky clean, and the equipment all stainless steel. All that makes doing business more costly, but Abdul says it's all worth it.
If you look into the demand of the halal product, yes, everyone when they go for shopping complex, when they pick up anything, they will look behind the halal, the barcode, the ingredient.
And that's partly because over half of Malaysia's population is Muslim. And to them, consuming halal is an obligation. Even fast food giant McDonald's serves only halal food in Malaysia. And there is also a growing range of non-food products that are being certified as halal.
We are seeing the emergence of new market. We are seeing a lot more Muslims getting very wealthy. Malaysia sees the opportunity to go into an industry that not many countries are basically participating yet.
The hope is that the halal industry will go the way of Islamic banking and finance, which for decades has served as a viable investment alternative to conventional financial institutions, both for Muslims and non-Muslims. An industry in which Malaysia has also found its niche.
I've lived in Dubai for a couple of years before moving to Beijing, and of course Islamic finance is a very booming industry in the Gulf Arab region. Now Kuala Lumpur has established itself as a global hub for Islamic finance as well. What is your growth outlook for this fast moving, fast growing industry?
Right. Well, what we have done for this decade is really put in place all the components and segments of the Islamic financial system, and this is to have the intermediaries. So we have highly diversified players in our system, both domestic and foreign, and we have liberalized that market to allow foreign corporations and multinationals and even sovereigns to issue sukuks or bonds out of our market in any currency. So in fact we've had dollar issuance and Sing dollar and renminbi issuance out of our market. So for us this is a very exciting development. So it's been growing by more than 20%. But the point that I also want to highlight is that Islamic finance is not only for Muslims, and it has drawn significant participation from non-Muslims, because if you walk to our major banks and you ask them in their Islamic financial business how many percent is by non-Muslims, they will tell you between 50 to 70% of those who participate are non-Muslims.
Global demand for sukuk or Islamic bonds is expected to double over the next 4 years, especially thanks to growth in the Middle East, of course, traditionally, but also in Asia, and then also new markets such as Azerbaijan or Nigeria. Now a survey by Thomson Reuters says that global demand for sukuk is expected to reach $421 billion US dollars by 2016, from just around $240 billion US dollars in 2012. What is your outlook for global sukuk issuance going forward?
Well, I think these are, of course, projections that are being made, and I believe that they are realistic, because there's been significant interest in this, and as you know, when there's a sukuk issuance, there has to be an underlying asset against which these sukuks are issued, and the kind of investments that are taking place in all these regions that you mentioned, the investment requirements are first for infrastructure development are very significant, and sukuks lend themselves to this. And then of course there are other like transportation in terms of port developments and airlines and so on, and telecommunications and oil and gas. All these kinds of business really lend themselves to sukuk issuance, and the expansion in these areas that are taking place in all these emerging economies are very significant. and therefore I believe even a fraction of it that is financed by the sukuk market will generate the kind of growth that you mentioned.
Last year you said that China could become the next staging ground for Islamic finance, and Hong Kong has been trying to establish itself as a gateway for Islamic finance into the mainland, but Chinese investors have not shown serious interest so far. How can you lure more Chinese investors into Islamic finance and also use Kuala Lumpur as a hub?
Well, as there becomes greater awareness of the potential and what are the benefits of this, of course, the benefits are to diversify the investor base from any fundraising, and this would be in the case of sukuk issuance, they would have the markets from Asia, including like Indonesia and Malaysia and other parts of the region, but also the Middle East and Central Asia and of course Europe. So and for investors, of course, they would like to have a diversified portfolio, and the renminbi will become increasingly attractive, and it is as China, if it wants to move towards internationalizing its currency, it needs to have a wide range of instruments at the disposal of investors. So this would be a very great move to have another asset class. And this asset class is supported by real economic activity.
When Chinese businessman Jason Lim and his Malaysian partner K.S. Lee decided to start an assembly plant in Malaysia over a decade ago, they knew it would be a gamble. They were about to bring Chinese trucks and heavy machineries into a market dominated by Japanese and Western brands.
At that period, we are a league of confidence of a China product. We have to build the confidence, the customer confidence. So we spend a lot, we invest a lot of in terms of after sales, a workshop, our network, everything.
And it's a gamble that they've so far been winning. Their company, China Industrial Holdings, is no Toyota, but it now employs over 200 workers assembling parts that are made in China, producing dozens of trucks, vans and heavy equipment every month at a plant not far from Kuala Lumpur.
They find that this country, in terms of there is political stability, there is an environment which a bit like some of the cities in China, like Guangzhou, Xiamen and so on. So this attract them.
So much so that a 6.5-hectare Kuantan Industrial Park, which was jointly launched by Malaysian Prime Minister Najib Razak and Chinese officials, has already attracted over $3 billion worth of Chinese investments. China has also become one of Malaysia's biggest trading partners, with two-way trade expected to reach about $100 billion by 2018. And with both the Chinese and Southeast Asian economies having proven their resilience, Jason and KS are more confident than ever that they've placed their bet on the right card.
Malaysia is home to around 7 million Chinese. That's a quarter almost of the population. Now, China is Malaysia's largest trading partner and exporting everything from rubber tires to palm oil. What is your forecast for trade volumes with China?
Well, the trade volumes, of course, have been increasing significantly. We export to China not only commodities but manufactured goods, and in the same way we import manufactured goods from China. So this volume has been increasing very significantly. And of course, you know that we, I think, are one of the first countries in the world to operationalize the swap arrangement that we have with the central bank in China, that to allow exporters and importers to settle their trade with renminbi. And this has also facilitated the trade flows. And of course, the investment activity also facilitates the increased trade trade flows. So this is going to expand. In fact, it has expanded to make China our largest trading partner, and we are China's largest trading partner in ASEAN.
Last year you mentioned that Malaysia and China will encourage more yuan-denominated bond issuance, and I believe Axiata Group and Malaysia's sovereign wealth fund Khazanah Nasional have already issued an Islamic bond, sukuk, in yuan. Now, what is your outlook for yuan-denominated issues?
Well, because it was so well received and it generated quite a lot of excitement. I think the one by the Sovereign Wealth Fund, the Khazanah, was oversubscribed by 7 times, and the Axiata issuance, which was larger, it was oversubscribed by 3.5 times. So all this encourages others to recognize that this is a possible way of raising funds denominated in renminbi. And as for investors, as I mentioned earlier, they are looking for instruments in renminbi, and certainly this would be an important source.
Let us also briefly touch on the internationalization of the renminbi currency. The Chinese government over the last couple of months has really pushed for major reforms in terms of making the yuan more convertible. Are you planning at Malaysia's central bank to diversify your reserves a little bit more into yuan, or do you think this step is premature?
Well, on the contrary, we began to diversify our reserves into yuan in 2009, and I'm told that we are the first central bank to be given the QFII, the approval to invest in fixed income. So we are the first central bank in the world to be given this allocation in 2009 to invest. I'm very pro-Asia, so we have already diversified our reserves into Asian markets since about 2003 at very small amounts, and over the years we have increased it. So we were very pleased to gain that approval for investment in fixed income in China.
Thank you so much for your time.
It's been my pleasure.